Auditing 9, Audit Assertions, Receivables and Payables. This is Ken Boyd, the owner of St. Louis Test Preparation. Here's our Facebook page, our email, and our website. The book Cost Accounting for Dummies is out March of 2013, and you'll now see that I'm blogging Accounting Accidentally is linked to my website, and there's the address. Excuse me. So when we talk about assertions when we relate to auditing, remember that the financials are the representations of management. And what we're trying to do is test what management is asserting or what they're saying about their financial records. And these are the 6 categories of assertions. Completeness, did we get everything in the proper period? Cutoff, this deals with transactions before and after year end and which period they should go in. Occurrence and existence means, did the transaction happen? Do you own the asset or you owed the money? Presentation and disclosure, that might be current versus non-current assets. Do you have the numbers in the right places? Are you disclosing what you need to? For example, related party transactions. Rights and obligations, a good one is inventory. Do we own? Do we have title over the inventory that we say we own? And then valuation and accuracy, are the amounts correct? So what I've started here is a series of questions, and then over here I've put the best audit assertion. Now I'll caution you that this is a difficult area that involves judgment, and that the assertion that I list as best, quote unquote, may not always be the best assertion. So just keep that in mind as we go through this process. Let's talk about cash. We get the detail of the cash deposits received. So we get deposit slips the client got from the bank, and we agree those amounts to make sure that they're posted as increases in cash and general ledger. That's testing the assertion of existence. Did we actually get the cash that we put in our financial records? And accuracy, did we put in the right amount? Anytime we're confirming, just about anytime we're confirming anything with an outside party, a third party, which is considered the best audit evidence, we're usually testing existence and occurrence. For example, if we have cash balances with other financial institutions like a bank, when we send a confirmation to that institution, a bank, an investment company, asking them to confirm a balance, we're testing to see whether or not that balance really exists in cash. 3, we get a check register. We look at checks written after year end. So if it's a 12/31 year end, fiscal year end, we're looking at checks that they write in January to determine if there was a payable needed before year end. So if they write a check for the magazine subscription in January, was that magazine subscription a payable before year end? Should it have been? And if it was it recorded? So that's a test of cutoff, meaning did we get the payable posted to the right period? Payments made to related parties. Maybe we have a big supplier and one of our board members owns that supplier and we do a lot of business with them. We verify that we did a lot of business because we find a lot of checks written to that company, and we have to decide, based on accounting rules, does that need to be disclosed as a related party transaction? And where we're going with that is it an arm's length transaction where the cost, the price that the supplier charged us was fair and reasonable, or is it an inflated price because we're doing business with a related party, a board member? Bank transfers shortly before and after year end. Again, this is a cutoff issue. Are we getting the bank balances recorded in the proper period? Physical count of inventory, which means we agree each inventory item, the description, the number of items, the size, the cost, from a detailed inventory list, and we're actually going to tag the items in a lot of cases. We're going to put a tag on them with a number, and we're going to agree that into the list of items of inventory that are in the accounting system. This is existence and occurrence. Does the company own the assets that are reported in the financial statements? 7 has to do with title over the goods. This is really a purchasing inventory question. So you review shipments of purchases that are in transit to the client's location at your end. So if we're Levi's making blue jeans and we buy denim material from a company and it's on a truck on the way to our location when we get to 1231, imagine that for this scenario. And we have to determine if the goods are shipped FOB shipping point or FOB destination, which has to do with who owns the good, who has title, and also who has risk if that truck blows up on the highway and the denim is destroyed. FOB shipping point, free on board was the old term for FOB. Means that the title and the risk transfers to the buyer as soon as it leaves the shipping dock of the denim company. So in that case, our company, the blue jean maker, Levi's, would own the denim, have the title and the risk, so we would include that denim in our inventory as a material. If it was FOB destination, the denim manufacturer would retain the title. They would have risk when the denim was on the truck, and that would not be included in our ending inventory if we were the blue jean maker buying the good. So does the client have title and own the good at your end? If it's FOB destination, the client owns the good while it's in transit and has risk of loss. We shift back to receivables here. We review an account receivable aging schedule. Are any of these receivables uncollectible because the company's in financial trouble? Maybe the people that owe us money are bankrupt, or maybe it's getting number of days that the receivable's been outstanding is getting to the point that it might not be collectible. If we as an auditor think so, we need to propose an audit adjustment to write off the receivable balance as an expense. So the question is really a presentation disclosure. We only want the account receivable balance to reflect the balances that are truly collectible. Truly collectible. Again, a confirmation has to do with existence in most cases. We're going to confirm a receivable balance by sending essentially a copy of the invoice to the client with a confirmation letter saying, can you confirm that you bought these goods? The amount, the size, the type, and the date that you bought it. What we're testing there is occurrence. Does a receivable really exist? Well, what if the client doesn't respond? We can perform an alternative procedure. Maybe we review cash receipts from that same client after year end to see that they paid the invoice that we sent them. If they paid the invoice we sent them in late December, later in January after year end, that would prove that that was a true receivable before year end. So the question again is, does the cash received after year end relate to a receivable before year end? Reviewing cash receipts after year end to shipping documents. Did you ship? If you ship something, it's probably a receivable. And if you ship something to somebody, they probably paid you, and they may have paid you after year end. Again, another test of existence or occurrence. You could also say it's cutoff. If the goods were shipped before year end, it should be reported as a receivable before year end, because you sent somebody something and you've certainly sold it to them. 2 more. Accounts payable. Let's shift gears. We take a payable and we trace it to the source document, such as a purchase order. We asked a vendor to put together an order for us, a vendor invoice, the vendor sent us a bill, or a shipping receipt saying that we received what we ordered. Again, the existence or occurrence, does a payable exist? Search for unrecorded liabilities. We look at checks written after year end to determine if the checks relate to items that were payables before year end. We talked about that one earlier. It's a cutoff issue. Is the payable posted to the proper period? So that's the beginning of Audit Assertions, mostly on receivables and payables. We have other video textbooks and spreadsheets not on YouTube. Here's the YouTube channel for live one-on-one tutoring and chat sessions. There's the website. The book we're teaching online every week and a free online course, and here's the blog. Thank you for watching, and we'll see you next time.